Over Unit 32, Settlement and Prorations. So in this unit, we're going to go over a transaction closes when the contract requirements have been met by all parties. All parties typically is buyer and seller. This unit focuses on analyzing closing statements, closing costs, and prorations. The topics we're going to cover is closing statements, proration procedures and calculation, closing costs, closing statement example. Okay, so you're going to have to do a little bit of research or independent study on your own. I'm going to go over the unit summary and the unit quiz. All right, so for the unit summary, these are the key points. So closing statement, aka settlement statement, right? So settlement statement is the same as the closing statement. In an account is an accounting of receipts and disbursements given to the parties at the close of escrow. The TRID disclosure details the terms of a buyer's loan. A proration is a proportional distribution of funds. If a problem states that 360-day year is to be used, all months have 30 days. So if you run into a problem and it says it's a 360-day year, then how many months do you have? All months have how many days? 30 days. If a problem states that it's a 365-day year, right? 360-day, every month has 30 days. If it's 365-day year, is to be used. Actual days in each month must be used, right? So, some months have 31 days, some months have 30 days. But if it's 360, you kind of remember it as 360, that's 30 days. 365, you got to go, depending on how many days are in that actual month. So it's 31 or 30. So unless otherwise stated, the buyer receives the benefits of and takes responsibility for the day of closing. The calculation rules for prorating are to draw a timeline, find the days used, find the cost per day, multiply the days used by the cost per day to find the prorate amount for time used. If unused prorate amount is desired, you want to subtract the used prorate amount from the total cost. When prorating items that are paid in arrears, you want to charge the seller and credit the buyer. Charge the seller and credit the buyer. When prorating items paid in advance, you want to credit the seller and charge the buyer. When prorating rent, you want to credit the buyer for the unused portion of the closing month's rent. You want to transfer the entire security deposit held by the seller. Closing costs that are usually paid by the buyer or the borrower are loan origination fees. Alta title policy and other loan costs. The seller usually pays for the owner's title policy. Escrow fees are usually split between the buyer and seller. Earnest money always appears as a credit to the buyer. All new loans, including seller carryback loans, are a credit to the buyer. So all new loans, including seller carryback loans, are a credit to the buyer. Loan payoffs and seller carryback loans are a charge to the seller. So number one, a real estate sale was closed on March 21st. The assessed value of the property is $72,000. The tax rate is $1.75 per $100 of assessed value. What's the proper entry on the seller's settlement statement? So you're gonna have to do some math. It is C 281-24. An apartment has 2 units of at $900 per month each, and 2 units of $550 per month each. The rents are paid the first of the month in advance, and the close of escrow is June 10th. How much will the buyer receive? So you're gonna have to do some math. It is B, $2,000 or 2030. Regarding a commercial settlement statement, which of the following is true? It is C. Seller is debited for property tax. So seller is debited for property tax. This is regarding a commercial settlement statement, right? So commercial statement is when a seller is debited for property tax. Buyer is debited for rents? No. Seller is credited for security deposits? No. Buyer is credited for property insurance? No. So the following is true. It is Bravo. Debit the seller 6 months taxes. Credit the buyer for 9 months taxes. In a real estate closing, what would the buyer normally pay for? Answer is D. Recording of new loan. So recording of new loan in a real estate closing, what would the buyer normally pay for? So the buyer's normally going to pay for recording of a new loan. Recording of a new loan. Are they going to pay for the deed preparation? No. Real estate commission? No. Release of old liens? No. Number 11, what is the prorated rent on an apartment which rents for $600 per month and the tenant moves in on September 11th? Answer is C, $400. On a closing statement, a $5,000 earnest money deposit is known as a credit to the buyer, but is not shown on the seller's statement because why? Bravo, it is included in the purchase price. So it's included in the purchase price. So on a closing statement, a $5,000 earnest money deposit is known as a credit to the buyer, but is not shown on the seller's statement because it is included in the purchase price. On a settlement sheet, what is usually true? This one's C. Buyer is credited for unpaid taxes. Buyer is credited for unpaid taxes. So on a settlement sheet, what is usually true? Buyer is credited for unpaid taxes. You are closing an escrow at the end of the month on a fourplex. The rents are $500 per month per apartment. Each unit has a security deposit of $200 held with the landlord. Which of the following is true? Bravo. Debit the seller $800. So debit seller $800. So you are closing an escrow at the end of the month on a fourplex. The rents are $500 per month per apartment. Each unit has a security deposit of $200 held with the landlord. Which of the following is true? So debit the seller $800. When a rental property is sold, how are security deposits handled on the settlement statement? Charlie, credit the buyer and charge the seller. So credit the buyer and charge the seller. So when a rental property is sold, how are security deposits handled on the settlement statement? Credit the buyer and charge the seller. How would a $20,000 seller carryback loan appear on a closing statement? Bravo, credit to buyer and debit to seller. So how would a $20,000 seller carryback loan appear on a closing statement? Credit to buyer and debit the seller. So you credit the buyer, debit the seller. Which statement is most correct regarding costs at settlement? Delta, the seller is credited for insurance. The seller has prepaid. So which statement is most correct regarding costs at settlement? So this is where the seller is credited for insurance. The seller has prepaid. So the key word here is prepaid. Who signs the settlement statement at closing? This is the settlement agent, right? Settlement agent signs the settlement statement at closing. So who signs the settlement statement? Settlement agent. On a closing statement, how would a buyer's new loan be shown? This one's going to be alpha, credit to the buyer. So in a closing statement, how would a buyer's new loan be shown? It's credit to the buyer. Debits to the seller include all the following except what? Impound accounts. So debits to the seller include all the following except Bravo impound accounts. So the commission, no. Seller carryback financing, no. Buyer assumption of the existing loan, no. A commercial property is closing escrow on October 9th, and the buyer is assuming the existing loan on the property. The tax proration for October would be what? Bravo, 8 days, debit the seller. 8 days, debit the seller. A commercial property is closing escrow on October 9th, and the buyer is assuming the existing loan on the property. The tax proration for October would be 8 days, debit the seller. All right, next up, we're going to talk about Unit 33, income tax aspects of real estate.